Hey, folks. Bob Desmond here over the Contrarian Trader, and welcome to another weekend where we want to find the best stocks to trade this coming week. So, the symbols that we're going to go over today are COCO, COCO, EPAC, EPAC, ESOA, INBK, ARM. I'm going to throw another one in there called FN. ARM and FN are going to be more longer term swing trades because we're basing our analysis off of the weekly charts. So let's begin. Before we get into it, don't forget our 14-day free trial offer to the Contrarian Trader. And we are sponsored today by our friends over at TrendSpider. Awesome trading platform, analytical tools, fundamental tools, back testing, strategy, determination, seasonality, analyst ranking, options activity, unusual options activity. There's so much here. It's ridiculous. Link below. Take advantage of our 35% discount code. I believe in it so much that I give it away free to our silver and gold level members, to the Contrarian Trader. So sign up. So these symbols that I went over or about to go over, they were found using a scan on TrendSpider. And what I like to do is, our edge here is that I like to scan for Bollinger Band squeezes on stocks that have very, very strong fundamentals, rising earnings per share, institutional demand, shares that are under accumulation, etc. So it's paid off for us very, very well. Why change a strategy that is working? So what I did is I used TrendSpider Scan, and if you join up, or if you already have a subscription, I can give this to you. I'm giving it away free. So here's my Contrarian squeeze, and I could either scan for, these are my own lists, growth with rising profits, Investors Business Daily top 50 stocks, or earnings per share and relative strength rating. I opted for this one today, and that's where we got most of our trades from. Daily chart. Let's go to a daily chart, and we'll run that scan. You can see COCO is one of the stocks that we wanted to talk about, and I'm gonna list all of these stocks in our Bull and Bear Banter forum. It's free to join. The chat room does cost a couple of dollars. It's very inexpensive. That's just to keep the lights on. But I'm going to post this later on in the Bull and Bear Banter forum. So head on over, sign up, take advantage of it. It's like not even $10 a month. It's like $7 a month or $6 and change for a yearly subscription. So it's well worth it. Great people in there. So take advantage. So I'm going to post all these charts in a little while in the chat room. Back to our scan. So I've already narrowed this down to the stocks that I'm looking to trade for the new trading week. So let's head on over. And I'm going to post my entry points, stop loss points, and price targets in the members area at the Contrarian Trader. Members, you could find it by going over the dashboard. Head on over to our current portfolio. Upper right, you'll see a list of watch stocks for the new trading week. So let's begin with COCO. Now, this is one that, again, has rising earnings, rising relative strength. So all we want is best of breed, because best of breed stocks give us a higher probability of profit. So COCO looking good here. You could see that, as noted by this manually drawn resistance level, we have resistance immediately above. This is a daily chart. We don't want to begin with this first. Let's begin with a I want to zoom in more on the charts. Let's begin with a weekly chart, and let's take a look at where we've been. So these are automated trend lines with the algorithm by TrendSpider. And you can see that we broke out of this long-term consolidation as measured by the Bollinger Bands in red that were trading inside the Keltner channels in green. And you had an explosive breakout, but now we've hit resistance. So are we ready on Monday morning to go entering this trade? I don't think so. Not quite yet. Something's got to happen. At a bare minimum, we need to close above 37.32, or we need a pullback. Where might that pullback be? You could use the Fibonacci's, perhaps down to $33.33 in that ballpark. Let's take a look at a daily chart. Daily chart, you have two resistance levels. The algorithm is picking off one in blue, the other one I drew in red. They pretty much align with one another. They're only separated by a couple of pennies. So we do have overhead supply above. We do need to clear this before we want to put on a big position. But once we clear this hurdle, I can imagine us putting on a larger position because we have now on a daily chart, as we did back here, back in October, another Bollinger Band squeeze. Again, a Bollinger Band squeeze is basically what it represents is a buildup of energy, a tug of war, if you will, between bulls and bears. And at some point in time, you're going to get an explosive move, either up or to the downside. We're betting that it's going to be up. That's why we're scanning for high probability trades with high quality stocks. And this overhead supply above, once we clear that, well, then I think that we're going a lot higher on cocoa. Here's a monthly chart. We have no overhead supply above after we clear this resistance level. So this is one of the charts that we're going to be looking to put on, or trades that we're going to be looking to put on, if not next week, the week thereafter. But what we want to do is we also want to take a look at seasonality. And a lot of times I'm asked, do you get seasonality if I sign up to your service with the contrarian trader? Yeah, you get all the functionality. The level that I'm using right now of TrendSpider, that's what you get. I don't have a special version of TrendSpider. This is exactly what our members get. So yeah, whatever functionality that I'm using is what you get. So Coco, we only have 10 years worth of data here. And it just makes it worthy of a conversation because you need more data really to give you a real indication of what the stock is going to do on any given month or a week. And in this case here, January, out of the last 10 years, we've had 0 up months in January. That's good information to have. The however is that in February, we've had 100% of the times over the past 10 years, cocoa has traded up. So am I in a rush here to go buying cocoa? Not yet. I respect the Bollinger Band squeeze on a daily chart, but I need a pullback to a support level, or I need to break out one of the two, and then we'll look to get long of cocoa. Now, the next chart that we're going to be looking at is EPAC, EPAC. And we'll take the trend lines off. Let's go to a weekly chart first to see how they close this out. And clearly a very bullish week last week. And in fact, you could argue that we broke out last week out of this triangle formation. The trend is clear. It's defined. We got ahead of ourselves a few weeks ago, the week of November the 4th. We have since pulled back. A lot of that froth has now come off, daily view. We broke out last week on a daily time frame. We have a Bollinger Band squeeze. Bollinger Bands in red, Keltner channels in green. This is a very, very attractive trade to me. I want to make sure that our momentum indicators are aligned. For that, we're going to use the stochastics. The stochastics are looking really good. A high or low. There's your high or low. A W formation. And it appears as though this stock is getting ready to rip. So this makes it onto our short list. I really like this setup here very, very much. Let's check out the automated trend lines. Let's identify if we have support below or resistance above. And we do. We have resistance right at the highs of the day on Friday, which was at 48.98. So am I a buyer right here, right now? No. There are two scenarios in which I'd be a buyer here. One clearly is that we need to close above this resistance level here in green. The other on a pullback to this lower band of support. So again, members, go into the members area later on. I'll update our price targets, entry points, stop loss points for these names. Moving on to seasonality. Now, we have a lot of data here. This is 37 years worth of data. And to be honest, that may be a little bit too much data. So I'm going to narrow this down a little bit. I'm going to go, say, since the new millennia, 2000. And the month of January is not a great one. It's only up 48% of the time. That being said, February, March, April, very strong months in terms of seasonality, up over 60% of the time. So January, as it turns out, is one of the weaker months out of the year. But I also want to drill down to a weekly view, and I want to know, how do we finish off December? And oddly enough, the last week of December is one of the best months out of the year for equities in general. That, however, for EPAC going back 19 years, it's only been up 25% of the time. That being said, for the next 2 weeks, good price action, but this final week has me a little bit iffy on getting big on this trade. So it's not that I'm not going to enter the trade. It's just that I probably won't go big initially. I'll be nibbling because I know through the seasonality analysis, I know that the last week of December is not wonderful. The month of January, men's and men's, not great. However, February, March, April, very favorable. Therefore, we'll be building a position throughout that time frame. I like the setup here. I like the trade quite a bit. So we'll probably be involved with this stock fairly soon. I'll be sending out alerts to members where I'm currently posting them in the feed here. And you can see that on Friday, I went long of EOG, long position 126.55. We also opened up a call spread on Tesla. So there's a link below. Sign up. It's free. Back to our symbols. And again, folks, I'll be posting in the members area here entry points, stop loss points, and price targets. ESOA is the next chart. Let's go weekly view first. All right, so a bit of caution here that this stock has been failing to put in new weekly higher highs. Now, to be fair, it got extended. So now we're consolidating gains. No reason not to trade the stock, just to be aware that it's lost a little bit of that momentum. Perhaps it might need a little bit more of a pullback, a little bit more time before you get involved here. Let's take a look at resistance levels. We have none immediately above. We do have support below. I'm going to create an alert here just in case we manage to pull back. Okay, so this is a BB is Bollinger Band squeeze. Our alert is set. If we get a retracement back down to the support level, we came close to it the week before last, but I could see this pulling back further. Now, daily chart, very tight consolidation here, really tight consolidation. And here is the Bollinger Band squeeze. Again, Bollinger Band's in red, Keltner channels in green. Momentum is rising as measured by stochastics. Let's check out the seasonality. $18 years worth of data, good enough. December, a strong month. January, only 50-50. 50-50 is not great odds for me. I don't like 50-50 odds. 67% odds get a little bit better. March is a nightmare of a month. It's the worst month out of the year. So this is good information to have before we open up a trade. Let's take a look at a weekly view, see how we might finish off December. Just like EPAC, the last month of the year is not a favorable one, nor is this coming week. It's only traded up 44% of the times out of the past 18 years. So I'm not feeling compelled here to go running in immediately and opening up a position. I don't know whether or not this is optionable. Perhaps I'll sell a put spread, get long that way. And when you sell a put spread, people hear put, they think that you're shorting. Selling a put spread is bullish. Buying a put spread is bearish. So I want to be the banker. I want to be the casino, not the gambler. Now, moving on to INBK, which is our next chart. Let's go weekly view first. Another one that is a bit extended, but we're consolidating. A lot of the froth has come off. So the weekly chart looking interesting. Let's throw up some trend lines here. Okay, so you could see that where we got stopped on November the 25th, and before that on November the 11th, the week of November 11th, the week of November the 25th, this is a weekly chart. You could see that it was right at that rising upper band of resistance. So right now, this setup looks pretty interesting to me because I know we have support immediately below. And if we break the support level, I really like the support level down here. So much so, I want to create an alert. Okay, and that just tells me that it's done what we wanted it to do. It's retraced back down to a support level where we could feel safe with getting long of the position as long as we still have that daily Bollinger Band squeeze. And a lot of people look at these charts and they say, you know what, this is a tight consolidation. You take a look at the daily chart, look at how tight this consolidation is. There's no way that they are going to sell this thing off way too tight. It happens, folks, because what Wall Street doesn't want you to know is that they may not be able to see your orders, but they could guess where your stops are. And if I'm a hedge fund or if I'm a mutual fund and I want to buy 20,000, 30,000 shares of IMBK, I'm not doing it at the market, nor am I doing a limit order. What I'm going to do is I'm going to identify where are their stops. Well, we know they're here. We know they're also here. So if I blow out all these stops by selling a whole bunch of stock into those stops, I could buy back those shares and then build my position at a historical support level. You see this all the time with these Bollinger Band squeezes. They look like tight consolidations, and all of a sudden, you get a really unusual sell-off, and then all of a sudden, you get a rip your face off rally. People don't know what hit them, but it happens all the time. It's called a liquidity hunt. A liquidity hunt. So expect that. Put your price in right where you don't think you're going to get hit. More often than not, you're going to get hit. ARM. Now, this one here appeared on my screen because I was screening for semiconductor stocks. And I like this setup. Let's go to a weekly chart. And you can see on a weekly time frame, we have a Bollinger Band squeeze. And we broke out last week. Very, very nice. We have a trend. It's clear. It's defined. I want to create an alert right at the support level. Give a little bit of room. 30-minute chart. Okay, and we're going to keep this active because we're trading off of a weekly chart. We'll keep it active for a month. And what I try to encourage members to do is that when you see a setup like this, set your alerts, set it and forget it. Walk away. Revisit it once the alert fires off. That way, you're not staring at your screen. You go about your day job, and when it fires off, you look at the setup. Is the reason why you set the alert up a week ago, 2 weeks ago, 3 weeks ago, is the reason why still there? Do you still have a Bollinger Band squeeze setting up? If yes, then that's your opportunity to buy at a critical support level because you have buyers of like mind that are stepping in and bidding up the shares along with you. And it allows you to also put in a tight stop. So that way, if you're wrong, you're long small or wrong small. So good looking chart. We're seeing momentum is measured by stochastics rise. What I would like to see are the stochastics. Let's try that again. I'd like to see the stochastics break out. Let's take a look at a daily chart. As a matter, before we do this, before we leave here, I want to overlay the automated trend lines. We have resistance up here. No immediate resistance, though. So that's attractive to us. Let's take a look at a daily chart. So on a daily chart, we broke out on Thursday of last week. We had a continuation breakout on Friday. Those who chase got punished. Don't chase these things. Always wait for the retracement back down to retest support. We have our alerts set up here already. If they pull it back, I'd be a buyer of ARM holdings. So again, members, I'll put the entry points, stop points, and price targets in the members area. Let's take a look at automated trend lines. This is another one where we could put up an alert as well. As a matter of fact, I can't modify sensitivity. So touch, bounce. There we go. All right, we'll keep that active. So we have two alerts set up here on ARM, momentum rising. Let's check out seasonality. Not enough data. Not enough data for us to use this, so we pass. Now, looking at the next chart, which is FN, Fabrinet. Let's take the automated trend lines off. Let's go to a weekly chart, begin our analysis there, because we want to identify where the stock has been to appreciate where it might be going. You don't want to do that on a daily chart, and God forbid you do that on an intraday chart. Don't do that. Let's check out the fundamentals here. Let's go to a quarterly view. And this is what I mean about buying best of breed stocks, folks. What this represents, this fundamental indicator here, it represents revenue growth. And this is the type of stock that you want to buy, because what it does is it increases your probability of profit. Fund managers want to buy these stocks. Momentum traders certainly want to buy these stocks. If you have one with negative revenue growth, then what are you doing? If you're wasting your time. So good looking fundamentals. Let's go back to the weekly chart. Good consolidation. We have a Bollinger Band squeeze on a weekly time frame. Bollinger Bands in red, Keltner channels in green. Stokes beginning to hook up. So momentum beginning to build, 3 consecutive up weeks. Do we have overhead supply? We know we do. And there it is, right here. This is the value of the automated trend lines. I did not draw these. This is the algorithm. And what it's telling you is that you have a lot of overhead supply up here. So this is one where I'd be willing to buy, but I'd be looking to see whether or not I could sell some calls. And this is the option activity on this stock. A lot of call buying here. A lot of call buying here. Short duration strikes, 240 strike price, expiration 17 of January. 190 calls. So somebody's in there buying call options as far out. They like this 240 strike. So they're buying, in essence, at the money calls out into April and January. And they're even buying the deep out of the money call options expiring in April at the 330 strike. And that would bring you up here above this resistance level. So if I was a call seller, that's where I would be selling premium, above this resistance level. So that could be an option. Buy the stock, sell a covered call. When I go out to April, probably not. I'd probably go out no more than 45 days, because you go out past 45 days, you don't have enough time decay to make it worth your while. So, and you can miss out on a lot of the upside appreciation if the stock really gets going. So let's take a look at a daily chart. We're stuck in a range here. I would not be a call buyer. I would be a call seller. I'm loving Stokes on both the weekly time frame, on a daily time frame. You also have a Bollinger Band squeeze setting up here. So again, what that implies, and this is why we scan for these names, is that you have a lot of pressure, a lot of energy being built up, and it's going to explode in one direction or the other. In all probability, it's going to explode higher. Why? It's because that's the general direction of the trend. This is also a stock with very, very strong fundamentals. So are we going to get it on a deep discount? I doubt it. We're probably going to have to pay a premium. So this is one that I think is very, very attractive, and one that's definitely on our watch list. And let's take a look at seasonality. 15 years worth of data. We'll look at the monthly data first. December up 60% of the time. January up 64% of the time. February up 71% of the time. That's very attractive. Now you can see why I would be selling calls into April, not buying them. April is only up over the past 15 years, 29% of the time. That's no bueno. That's bad. So I would not be a call buyer into April. I'd be a call seller. Let's check out the weekly seasonality. The next couple of weeks, very, very favorable as we close out the year. So FN is looking very good from a technical perspective, from a fundamental perspective, and from a seasonality perspective as well. And plus, you have some options activity in there that is bullish. What are the insiders doing? Not a lot of selling here at all. Not a lot of buying, but they're being awarded stock. They're not selling it. One more I have to go over, and that's NIC, Nicolette Bank shares. Let's go weekly view first. So we're in a tight trading range on a weekly time frame. Let's bring up fundamentals. No data. Odd. Okay. Let's check out. Yeah, this is number one in its group. Banking sector, regional bank, EPS growth 32%. I mean, off the charts, under accumulation. Beautiful, beautiful numbers here. ROE could be better. That's the only negative. This is accelerating earnings growth. 3-year EPS growth is only 2%. The last quarter was 32%. Estimated percentage change for the current year, 14%. So we're accelerating growth here, which is what we want. So the fundamentals are sound. Do we have overhead supply? We do. Up here at around 126.10. We have a lot of room between where we closed on Friday and there. Momentum is still strong. A lot of people say, oh, technical analysis for dummies will say stochastics above 70, you got to short the stock or you got to sell it. Nonsense. What the momentum indicator is telling you here is that this is a strong stock. Strong stocks tend to get stronger. Daily chart. So again, we have a very tight Bollinger Band squeeze. This is going to have an explosive move. Let's check out the seasonality. 12 years worth of data. January up 64% of the time. February, the second best month out of the year. March, 64% of the time. I mean, from a seasonality perspective, the stock is screaming buy. Technically, it looks good. Let's drill down to a weekly view, see how we finish out the year. Now, a point to make here is that the remainder of the year, again, as I mentioned earlier, 50 odds are not good odds for me. I want far more favorable odds. So the rest of the year is wonky at best. The first month out of the year for NIC is no bueno. So this is one where I could see us selling a put spread, having the shares assigned to us. I don't know whether or not I would go outright and buy the stock right now. But the question is, do we have options here? Is it optionable? No. So I like the stock. If I do open a position on a breakout, it'll be small, and we'll leg into the position as time goes by. We want to respect the seasonality here, which for the next few weeks is not that favorable. But on a monthly time frame, the month of January, February, March, they look all very, very good. So we open a small position, We make it a big position as time goes by, as the shares show that, okay, we're beginning to break out. We want to buy on strength. And that's it, folks. Don't forget, 35% discount code. Take advantage of TrendSpider, and I give it away free to our silver and gold level members. So head on over and don't forget, sign up for our forum. It's linked down below. It's free, no credit card required. If you want access to the Bull and Bear chat room, that's great. A lot of great people in here. Very small fee. Sign up for the annual fee. It's on average a little over $6 a month. I mean, it's ridiculously cheap. I just have it just to pay the bills. That's it. Everybody have an awesome remainder of your weekend. Don't forget, we go live Sunday Night Futures Live, 6 p.m. Eastern Standard Time. Share this with a friend, like, subscribe. You know the deal. And everybody enjoy your weekend.